All right. Hello, everyone. My name is Mark. I am the stock market jobber, which is a historical term, by the way. I'm a big history buff. I mean, I don't know if you can see behind me, but I got bookshelves here, all different history books. I really like American history, and I like the history of the markets. Now, I've been a trader. Well, I was a trader for like 20 years in the institutional world. And yes, I traded for hedge funds. Yes, I was a market maker. Blah, blah, blah. Yay, me. But one of the things I've learned over the years is how important it is to know where these price levels are. So let's just take a look here. And then what we're going to do is we're going to stroll back in history and see how the same stuff happened 100 years ago, 150 years ago. Um, no, this is just our technology sector, just to get started here. So notice how this level that was support here was resistance back here. Well, this particular price level was important for some reason. There's people who sold back here, and when the price goes higher, a lot of them say, I made a mistake. If it gets back to the price I sold at, I'm going to buy my shares back. So you have remorseful sellers placing buy orders at the level that was resistance. I don't think it takes much stretch of the imagination that if you know where these levels are, where there's a good chance the markets are going to turn, it's going to help your trading. As a matter of fact, if you don't know where these price levels are, I don't see how you can be a successful trader. Notice here, same thing we see up here. Resistance became support. See this? Resistance here becomes support here. Now, check this out. Support is intact. Why would support stay intact? This is also because of seller's remorse. There's people who sold at the support and the price goes higher and they say, I made a mistake. If it gets back to the price I sold at, I'm going to buy my shares back. All right. So seller's remorse can turn resistance into support, and it can also keep support intact for a long time. As we go back here to the end of 22, early 23. I mean, look at this. You don't need to be a former hedge fund trader or a market guru to see that certain levels are important. Resistance becomes support. Now, there's also another phenomena that we see all the time. It's very common in markets is this is support turning into resistance. So this happens because of buyer's remorse. So people buy, the price goes under where they bought, and they say, I made a mistake. If I get out at break even, I'm going to. So when it finally gets back to their level, remorseful buyers placing sell orders can convert the level from what was support into resistance. You can see that down here. Support becomes resistance. Resistance here becomes resistance here. Now, why would resistance stay intact? Why would a market find resistance at a former peak? This is buyer's remorse too. It's manifested in a different way. People buy at the peak. The market goes lower. They tell themselves, if it ever gets to my price, I'm going to get out at break even. All right. So they placed remorseful sellers, buyers placing sell orders keeps the resistance intact. And I mean, you could just look at pretty much any stock. Today is April 25th of 2024. And I mean, one of the most important things I'm watching in the market today is how Apple acts around this particular price level. Look at this, same stuff. Resistance at a former resistance level, support. Apple sells off, and now it's trading right around this level. Biggest thing probably to watch in the market today is Microsoft. Notice this support, right? Stock falls, find support at a previous level. All right, so as we see, some price levels are more important than others, and buyer's remorse and seller's remorse can keep levels that are important intact, or it can convert them from support to resistance. Now, what we're going to do here is a little walk back in time. We're going to go check out the Dow Jones back basically when it started. The Dow Jones was started by Charles Dow, who was one of the founders of the Wall Street Journal, and they came up with this index just to kind of keep an eye on, help investors know where things are going. Anyway, what happens here? 1896, we hit resistance on the Dow at 42. Go and find resistance there, sell off. What happens here? 1898, find support. Support at a former support level. Support at a former support level. Keep in mind, we're looking at a 25-year chart here. This is resistance in April of 1899 to November of 99, and then it becomes resistance again in June of 1901. Have this resistance staying intact. Now, there's not a single person alive, at least that I know of, who was trading then that is trading now. The companies are vastly different. The technology is vastly different. These are probably railroad companies and tobacco companies and whatever, as we get up into the 20s, probably phone companies. But what hasn't changed is this human emotion. Back in 1897, people felt buyer's remorse. People felt seller's remorse. If we had charts of the stuff that the Romans traded or the Greeks traded or the Phoenicians traded, I would think we would see these same patterns. Candlestick charting started in the 1500s in Japan. So it was started by the rice traders. People have been looking at the same candlestick patterns for hundreds and hundreds of years. All right, let's just have a little bit of a stroll through time here again. I think this is, as a history buff, to me, this is very interesting. Market has a big sell-off here in 1903. Finds support right around $40. Same level it hit resistance at in 1896 and support in March of 98. Market crashes, finally finds a bottom in June of 32. Where? The level that was support before. If a market's going lower and you're wondering where you should buy something, well, a lot of times it's a good idea to buy at the level that was support before, because there will be support again. All right, now let's just stroll up here a little bit through time. I mean, you can see it happening everywhere. And you can see this on basically any chart of any security. You got to know where these levels are. I teach my students levels, trends, momentum, psychology. That's it. Don't worry about finding some trick system that's always going to work, because they don't exist. The best trade, when I was at SAC, all Steve ever talked about was psychology. All right. And if the greatest trader in history potentially says it's important, well, someone to listen to. So anyway, back to the Dow here, November of 38 resistance, October of 39 resistance. Fast forward, right after World War II, where market sells off, where does it find support? Exact same level to within points. I mean, think about this. We're talking about decades and millions of people and trillions of dollars, and yet somehow the market can manifest itself, or these precise levels can somehow manifest themselves. It's really fascinating. And like I said, I've been doing this a long time, and it's still mind-boggling to me. So 1956, the Dow runs into resistance right around 525. Early 60s, massive sell-off. This is probably the Cuban Missile Crisis. Where does it find support? Same precise level to within points. Here we see again resistance in January of 62 becomes support in October of 66. This is an excellent example of a psychological level. Look at this. The Dow Jones, every time it got to 1,000, from 1966 to 1981, sold off. Now, they didn't have ETFs back then, and they only had a very few mutual funds. So it's not like today. This is people, literally, anyone who's trading American stocks all over the world saying, if the Dow Jones gets to 1,000, I'm going to sell. All right. People like round psychological levels. It's amazing. And this right here dismisses this whole myth of buy and hold. There have been long periods of time in our history where buy and hold doesn't work. I mean, people kind of say it now because we're, basically had a 10-year bull market, and now we're back. Well, now we're back up. Well, we're off our highs, but anyway, you know what I'm saying. The market's been very good for the most part over the last 15 years or so. But if you bought stocks in 1965 and you had a buy and hold attitude, you wouldn't have profited until 1982. Anyway, support. Let's just keep moving through time here. And now we're in September of 98, August of 98. We get the big sell-off. I think that might be long-term capital. Find support here. Finally get the internet crash. Market finally finds a bottom, same level that it did back here in 98, in 2002. Here, April 09. We could see here resistance February 15 became support in May of 20 or March of 20. This is the COVID crash. Here, resistance becomes resistance. Now, the S&P goes back even farther. So this is the S&P 500, and this is 1871. Now, find support around 420. It's at 5,000 now, $4.20 in January of 85. Then it was support all through from August of 1893 through March of 1897. Up here around $6.40. Resistance in 1881, resistance in May of 1899. It converts to support. February of 04, May of 07, July of 1921. Look at this 1015 level. It was resistance from 1906 through February of 16. we get this big sell-off here. This is the Great Depression. And where does the S&P find support? The level that was support from July of 1884 through 1886. And this, I was studying the Spanish-American War because I was wondering what happened to the market. And after the Maine exploded, the market was very bullish for the market. But anyway, that's it, everyone. Let's just move through a little bit more here. So January 1937, we find a peak at the same place, March of 46. So remember, we get these price levels because of remorse. And why does something rally off of support? Support's a large group of buyers. So sometimes the buyers sense there are other buyers coming on the market and they jump ahead of each other. And this causes a bidding war, which makes the price rally. The opposite is true when we get to resistance. Sometimes some of the sellers start to get concerned they're going to miss out if there's other sellers that are willing to sell for a lower price. So they start to undercut each other. So if you know where these important price levels are, it's going to make your life a lot easier. And, I don't care about technology, AI, the internet, television, all the innovations over the last 150 years. They've all changed, but what hasn't changed is human nature. When you look at a chart, if you look at it the right way, you should look at it through the prism of what does this tell us about supply and demand, and what does this tell us about market psychology. All right, well, thanks everyone. Hopefully that was helpful, and I will see you soon.